All right. It's been 10 years, Bruce. First of all, congratulations. I mean, just making it this far, particularly given all that's gone on since that IPO debut back in 2014. Give us a sense here of how much the bank has changed, and I guess to a certain extent, maybe you as a CEO have changed over these years.
Yeah, so thank you for the congratulations. It's been an incredible journey for us, and there was a lot of work to do because we had a parent company, RBS, that was in some trouble, and so we had to make up for a lack of investment and really focus on building out the foundation blocks and then finding the areas that we could successfully grow in. But I think at this point we've had a real transformation of our consumer bank. We have really invested heavily in the commercial bank, and I think we have one of the best positioned regional commercial banks. And now we've made a big play to get into private banking and private wealth after the failure of First Republic last year. So we've built out some really strong businesses. We're not the finished article. We've made a lot of progress, but we feel really good about our outlook for the future.
Let's unpack some of those segments. And I do want to start with the wealth management business. This is relatively new, at least in terms of the expansion that you've had there. I guess the question is, why did you choose to go down this road? And are you finding, I guess, stiffer competition than you expected?
Well, I think in any business, you really win with great talent. So the opportunity to take some of the best private bankers in the country who really didn't fit the JP Morgan approach to the business and wanted to recreate what they had at First Republic in a 2.0 strengthened platform was very appealing for them to come to us, and for us in trying to really make inroads into that business. We lock up the talent and then we bring our overall capabilities across the consumer bank and the commercial bank to their customer base. We thought that was the perfect way to get a foothold in the business and then really ramp it. So far we've had a lot of success. At mid-year we already had $4 billion in deposits. We have $3.6 billion of wealth assets under management, and we have a lot of momentum. So really excited by that. And we're also bringing some wealth teams in because they see what we're building and they find the platform at Citizens to be highly attractive.
What's the cost of those acquisitions, Bruce, in terms of bringing these people on board?
Yeah, last year it was interesting. So with all the turmoil that was taking place, we nonetheless said, let's go on offense here. We've got a strong capital position. We invested 11 cents of EPS because when the people come in, the expenses come first and then the customers come later and bring the revenues in. We did say that by the fourth quarter this year, the lines will cross. We have enough business now in the door that will go from losing that 11 cents to breaking even by the fourth quarter. And then by next year, we said the line will keep going up on the revenue side and will hopefully be 5% accretive to our bottom line. So we're on track to deliver all of that.
Of course, part of this was, at least this latest push was born out of that quote unquote regional banking crisis that we had back in early 2023. How much, I know that Citizens itself wasn't quite as affected by this as some of the other banks, but when you look at sort of the fallout from that, have you seen deposits and more importantly, just depositor activity get back to some of those pre-crisis levels?
Yeah, so I think for a while, all regional banks were on the back foot, like there was a who's next kind of sentiment in the marketplace among depositors. But we always had strong capital and liquidity position, so you had to tell your story. But over the course of last year, things started to settle down, and they're pretty stable this year, which really allows you just to get back to business and focusing on delivering for your customers and executing your business strategies.
I do want to talk about the state of the real estate market, particularly commercial real estate. I know Citizens has some exposure there. There's been a lot of talk about whether that industry was on the precipice of collapse. There's been a lot of stories on Bloomberg just in the past few days that those sort of death notices were greatly exaggerated. For you and your portfolio, what is the state of commercial real estate?
Well, I would say broadly, most of our portfolio's in pretty good shape. So multifamily and industrial and distribution space where we have exposure in those segments, those are making it through reasonably well. The big concern has been general office. and where, I think the pandemic certainly changed work behavior, so there's more people working remotely, and the market has to make adjustments, so you kind of add the higher interest rates, higher inflation on operating costs, and then less demand for space long term. There's a major workout that has to take place, and I think, the nice view from our standpoint is that we have this heavily reserved. We have our best people working on solutions for borrowers. We're charging off loans and working off loans. It's probably going to be with us through a good chunk of next year, but it's not something that really impacts the overall performance of the bank. It's kind of ring-fenced, and we're working through it.
Does the drop in interest rates, or at least the start of the drop in interest rates, does that help? Is that going to help?
Yeah, that should help, particularly I think when the Fed gets on with it and the rates get down maybe 1.5% to 2%. I think that'll really start to benefit many borrowers.
Bruce, I do want to talk about just your tenure here. Of course, you were at the helm when this company went public here in the U.S. Back in 2014. You've had a long career. I'd be remiss in not asking you what your plans are for the future, how long you expect to stick around in that seat as chairman and CEO.
Yeah. So I'm still really engaged in what we're doing and building a top performing bank. I've got a great team. I still have plenty of gas left in the tank, so to speak. So I have no imminent plans to step aside. But, we are working on kind of building a bench and making sure we have succession inside the company. And I think I've got some good folks that are developing that could eventually run the bank. So anyway, there's more to do. I'm happy doing it. I have a spring in my step every morning when I get out of bed. So we're doing it together as a team.
Has there been any discussions about M&A, Bruce?
Well, I think there's always an opportunity to consider, can you find ways to accelerate the build out of the bank? At this point, the last major piece that we needed to get done was New York Metro, and we did the acquisitions back in 2022 of HSBC's East Coast branches and Investors Bank, which give us 200 branches in New York Metro, 1 million new customers. We're being very successful with that. That was kind of the last big to do, so I think at this point, we'll focus on organic growth, and we'll be opportunistic. If there's things that look attractive to us, I think we're strong and we have an ability to integrate things successfully, but we don't have to do those things. I think we have enough scale to continue to operate successfully and drive the results we're looking for.